Bonding with the bands. Bollinger Bands secrets. Swagat hai to the best video you'll find on the internet on Bollinger Bands and trading strategies by using the Bollinger Bands. Whether you're a beginner or an experienced trader, this video is for you. Get ready to expand your knowledge on Bollinger Bands and get equipped with a few simple trading strategies using them. We'll be explaining how the Bollinger Bands work and how they can be used for your trading. Additionally, we'll be discussing a few simple yet effective trading strategies that make use of Bollinger Bands to maximize your profits and minimize your risk. Bollinger Bands are a technical indicator used by traders and investors to understand how overstretched the prices are on either side when compared to the mean, that is the 20-day moving average. They can be found easily on any trading platform and looks like this when applied. As you can see, the prices are surrounded by the bands, thus the name, on both sides. The green line above the price is 2 standard deviations above the mean, and the red line below the price is 2 standard deviations below the mean. As you might have already realized, when prices touch the upper bands, there is a tendency for them to go down and revert back to the mean or towards the lower band. Whereas when prices touch the lower bands, there is a tendency for them to go up and revert back to the mean or towards the upper band. This essentially happens because Bollinger Bands are put together based on the principle of bell curves. For beginners, whenever you plot a random set of data like the weight of people, height of people, or the income levels of people on a chart, it will take the form of a bell curve, meaning majority of the data will be stacked towards the midpoint of the bell curve. There will be some outliers towards the extreme right and to the extreme left. For example, organizations often use bell curves for doing performance appraisals. Most of the performers would be around the middle, who have performed well in line with expectations. There will be few outperformers who would be on the extreme right, and there would be some underperformers on the extreme left. In financial markets, when we apply the same concept, the expectation would be that most times prices would be trading around the midpoint, that is 20-day moving average. There would be times when the prices move too far up, making them overstretched on the upper band, and there would also be times when prices move too far down, making them overstretched on the lower bands. This is what provides opportunities for a trader. However, trading is not and will not be as easy as saying buy at lower band or sell at upper band or walk your way to the bank. If it were so, everyone would be doing it already. So, while Bollinger Bands provide a tremendous edge to a trader, like any other technical indicator, they need to be used responsibly too. Let's outline a unique trading strategy that one can use to form a trading setup using Bollinger Bands. Strategy 1. Buy the W and sell the M. Very simple, but effective pattern involving 4 key criteria. With a little market acumen, one can reduce it to 3 criteria, improving the chances of a better entry. Point number 1. Wait for a reaction low to form. This usually can be observed when securities are falling relentlessly. This reaction low is usually below the lower Bollinger Band. Point number 2. Observe the price bouncing to the middle band, that is the mean or the 20-day moving average. This is usually a dead cat bounce without much potential. The important point to observe is when the price pauses at the middle band and it resumes downwards. Point number 3. There's a new price low in the security. This low holds above the lower band. The ability to hold above the lower band on the test shows less weakness on the last neckline. Point number 4. The pattern is confirmed with a strong move of the second low and a resistance break. Now, usually, the buy can be confirmed on the third step itself, based on evidence of some bullish candles, as you can see in this picture, because by the time the fourth step is confirmed, prices would have already rallied quite a bit. Ideally, a professional trader would use the resistance break to add to his existing buy positions, that is, scaling in. Post the W confirmation. You can see the prices rally handsomely in the picture below. Now, how can one capitalize on these big moves post the W confirmation is beyond the scope of his discussion. Maybe we'll have a separate piece on trade management. Now, the same steps could be followed in exactly the reverse manner for a short setup. Let's quickly review the steps for a short setup. Price is making a reaction high. Price is coming down to the mean. Price is making a new high higher than the reaction high. Price is breaking a support. This is how the M top would look like. Although this strategy can be applied to any time frame with equal effectiveness, and lower time frames are likely to give more signals or more trades, and likewise higher time frames are likely to give less signals and less trades. While intraday traders typically use 15 minutes or 30 minutes for this strategy, swing traders would use 60 and 240 minutes. Positional traders will use daily or weekly, and investors would use monthly time frames. In conclusion, Bollinger Bands is a valuable technical indicator that can help traders make informed decisions in the market. By combining the use of Bollinger Bands with simple yet effective trading strategies, such as the one we discussed today, traders can potentially increase their profits while minimizing their risks. Remember, there is no one-size-fits-all approach to trading, and it's important to always do your own research, consult with financial advisors, and use a strategy that aligns with your personal goals and risk tolerance. Stay tuned for the next part of this video series, where we'll be diving into 2 more trading strategies using Bollinger Bands. These strategies are designed to help traders further expand their knowledge and potentially maximize profits and minimize risks. Don't forget to like, share, and subscribe for more such trading related content.